What's happening all? It is December 17th, another Tuesday on us, and we've got a bit to talk about. First off, before I get into market crap, I've got my buddy Nate in-house. He's staying with me for a couple days. And you'd known we'd had a bit of a campaign going on when it comes to the bullshit of human trafficking that we see all over the globe, actually, and that has continues to just keep going up and up and up. One of the biggest businesses in the world. And then, of course, with our border situation being what it has been for the last few years, we know that there's a hell of a lot more happening around us than ever before. Well, Nate had introduced me, to a lot of ways to be able to affect some sort of change in that. You, as those of us who worked with those who worked with us and my team, also affected change. We helped fund multiple different operations that happen in multiple countries. But now there's a little bit of a pivot. Work with Nate. He's now working here in the United States. A lot of that money that was donated, all the capital we raised in the past it was effectively close to $500,000 went to fund operations over in other countries and overseas. Now we're bringing it home. Nate is kicking in doors at home. He's working with local law enforcement, training local law enforcement all across the United States to affect operational change immediately. And they're able to see their training at work firsthand and see things happening in real time and are happening effectively and quickly. So we're going to take a bit of a pivot from what we were doing in the past, and we're going to start helping that organization. And it is referred to as the innocent.org. I'm going to go ahead and share a screen real quick here so you guys can see that. Go check it out. Get onto their website, look at this, understand what they're doing, and it's happening in your neighborhood. So one of the big frustrating things that for myself is we know this stuff's happening on the globe. We also knew that the United States consumed more child sex material than any place on the planet. But there's the source out there. But what about the guys here that are actually consuming it? Well, they're taking care of that. So now you have it happening all over the place. Finally, we got some people internally. And I see the stuff online, the guys that, chase these guys down, shame them, that kind of stuff. It's going a lot deeper than that. So that's that. Just know that we as a team are going to be supporting this heavily. Going to give you guys ideas on how to help support that as well so you can start seeing change in your own neighborhoods. With respect to the market, we've got a couple things that's happened. We've got Yahoo Finance actually did a bit of a commentary on what's happening with the producer price index. We talked about this last week, how that has jumped up. That this particular index that tracks the price companies see what coming into them. This is what it takes to produce goods for you before you get the actual final price. That rose 3% from the prior year, which is up from the 2.4% they saw in October. And so with that big of a jump, it does have an impact on what's going to happen with interest rates. And we saw interest rates actually take a negative hit as a result of that. Other thing that we saw out there is the Bureau, we see here, the Business Insider talks about because of what's happening in inflation, it's not as under control as everybody wants it to look like in the news. They expect that it's not going to get any easier to buy a house over the next couple of years. In fact, they expect the average price point to reach about 400, if I remember correctly, is about 455,000, which is going to be, 455,000 in 2026, which will represent the highest level on record. So what does that mean for you, the real estate investor? Well, one, all these claims of what's happening with inflation, we're not going to see interest rates get any better, any faster. We've been saying that. Not been something that we have not told you to hold out for rates to get better. We're going to tell you lock. Be aware of what the market's not going to change anytime soon. If you've got lenders out there telling you to hold out and wait, they don't know what they're talking about because a lot of times they just don't. They haven't been in the market long enough. So we're going to go back and we're going to look at the charts, as always. We're going to see where we sit. Now, because of these inflation readings, we came off of these points that were getting really close to, that big wall, that barrier we talk about all the time in the charts. We came off of that. We hit right here, one of my support levels that I've been watching, came right off of that, hit it this morning, bounced right off of that. So we're in a spot here. We're maintaining our interest rates from the last couple of days, but it's going to go sideways. If this holds and it continues to have strength here, there's a good chance this particular level, and I'm going to turn that red, could maintain as another level of resistance. These are all now ceilings that it has to have some sort of news to give bond traders a little bit of confidence in the market as far as bonds are concerned, that inflation is more under control because inflation is the enemy of bonds, and we break through that. But what we're looking at right now is inflation is something everybody believes is going to continue to get worse. House prices are going to go up. What does that mean for you as an investor? Too often I hear people freaking out, well, rates so high, it just doesn't make sense to invest in real estate. Are you kidding me? The cost of housing is going up. So let's say you bought a house for 200,000. Let's say you put 20% down. That's $40,000. You got a $160,000 loan. Let's say your costs are 10 grand. You got a 7.5, 7.6% interest rate. Well, you're 50,000 invested in this deal, right? 20% down, 40,000 plus, let's say 10,000 total cost. That's a high number. I use a high number so we can be very, very conservative. So 50,000 invested, you have a $160,000 loan. Now, the only job you really have to worry about as a real estate investor is to buy something people will rent. You got to keep it reasonably rented the entire time you own it. You have to be able to get something that will appreciate. We just saw it's going to appreciate. Yeah, the entire market is looking at housing getting more and more expensive. Why? Because we're just not building enough. So if you got that house that somebody else is paying off a $120,000 loan, get your calculator out. Run this. We're looking at a 30-year fixed. Rates are not going to go down anytime soon. So why would you refinance for rate? You're not going to. It's stupid to refinance for rate. If you're one to get suckered into that, let me just tell you, you're being owned by your lender. And the lending industry is basically grabbing you by the balls and leading you around. It's not about the rate. So if you have somebody paying off that, your renter paying off that $160,000 loan, divided by 30, it's going to take you 30 years. Never pay extra. People will tell you to do that. Again, leading you around by your balls. So 160,000 divided by 30 is $5,333 a month. Excuse me, $5,333 per year. That's what they're giving you. Not a lot of money. But when you divide that into the 50,000 investment, that's a 10.6% gain on your investment. Your investment is growing by 10.6% every year somebody else is paying off the note. So set that aside. Now let's say we're looking at some pretty significant gains or significant growth in the cost of housing. Let's just say the market you're in is only 2.5%. Nothing sexy. You won't get happy about that. But what's cool about that is your competition won't come in and try and buy it out from underneath you because it's only going to grow up by 2.5%. What's 2.5% of 200,000? About $200,000 house, right? It's appreciating by 2.5%, a very meager amount. Do the math on that. That's $5,000. Nothing sexy. But what percentage of your 50,000 is that? Another 10%. You're making 20.6% on your money before a single dollar of cash flow comes in. So if you're running numbers on a purchase price and an interest rate and a rent, and you're saying, I'm not getting very much cash flow, and that's what you're basing everything off. You're walking away from amazing deals. If your lender's not talking about this, it's because they don't know what they're talking about. They know how to quote an interest rate. They know how to close the loan. That's the barrier to entry in the industry. So a couple things you're going to get working with us. We understand the market. We understand how to make you successful as a real estate investor. We're going to work with you to find out what your goals are and get you there. And then we take the profits that we get and support a cause like theinnocent.org. So that's my backdrop. I will talk to you guys on Friday.